So what is price action? Well, make no mistake about it, it's exactly what it says it is. It's the bars on the chart which gives us the clues as to whether the market's going to go up or go down. It's the price on the chart, and here we've got the definition. It's the concept of price action embodies the analysis of basic price movement as a methodology for financial speculation as used by many retail traders and often institutionally where algorithmic trading is not employed. Since it ignores the fundamental factors of securing and looks primarily at the security price's history, although sometimes it considers value from the price history, it is from technical analysis where, boring, let's move on and show you some actual examples of this. It's one thing to be theoretically up and knowledgeable on trading, but it's another thing to actually apply it to the market at hand. So let's move on and show you some real examples. She's got it right. That was so boring, and I even bored myself by falling asleep into it. So price action is simply how price changes. It's the price of the market over time, and the charts which we look to and make our financial decisions from, whether the market's going to go up or go down, is based on where the market has been before and of course probabilities. So looking at this one, we've got an upward trend where the market has increased in price over a period of time in December, as you can see here. And this could be any asset class. Price action is very universal. It can tell the same story. Whether the markets are going down, whether it's gold, silver, the FTSE, the Dow, the DAX, the CAC, stocks, or indeed majors or minors, or exotic currency pairs for that matter. So you can see here that as the bars, these are what we call Ohlc bars, open, high, low, close. They reflect to us, given that the trajectory of the trend is moving upwards over time, it signals to us that this asset class is rising in value and that there's more bulls in the market than there are bears. So you've heard me mention Ohlc bars. Well, there are two types of bars which can accurately give us or lucidly give us an interpretation of the market. Ohlc bars stand for open, high, low, close, and typically we get a green bar if it's a buy bar, where we get the open at a lower price to the close, and therefore the bar closes at a higher price than where it opened. This is a buy bar where it signals to us that the bulls are in the market. On the flip side, a seller bar is where we have more sellers in the market and where the bar closes at a lower price to where it opened, reflecting that there are sellers in the market here. So here we go, you can see that we've got Ohlc bars, both buyer and seller bars here, although the market really isn't doing anything, it's moving sideways. We've also got candlesticks, which are slightly different. Whether you decide to choose Ohlc bars or candlesticks is personal preference. It really is a personal thing. We personally prefer to use candlesticks, but there's no right or wrong answer with this in mind. As you can see here, the underlying colors like red for a seller bar and green for a buy bar, obviously is the same as an Ohlc bar. So you can see here on the left hand side we've got the low and the high, but the close is at a lower price than the open, reflecting that sellers came into the market and closed this bar at a lower price to where it opened. Hence it's a seller Japanese candlestick. Conversely, a buyer bar or a buyer Japanese candlestick will close at a higher price to where it opened, signaling that there are more buyers in this market willing to push price up to a higher price at where it opened. And of course this can reflect any kind of time frame. It could be the 5-minute, it could be the hourly, daily, weekly or monthly chart for that matter. So here, price action, and not only can we read every bar for its own kind of verdict when it comes to who won the bar, buyers or sellers, who closed the bar or opened the bar, was it a buyer or a seller bar. We can also identify patterns to trade price action, and as technical traders we do look for these recurring nuances in order to profit off really, and what has happened in the market before will tend to happen again. We trade with probabilities in mind here. So as you can see here, we did have an upward trend making higher highs and high lows. You've got this trend line down here, and of course price broke up above this trend line to continue its upward trend. But as it's already making higher highs and higher lows, it seems a lot more likely that it's going to continue this upward moving trend than it's not, quite frankly.
Trading does not have to be difficult or time consuming. In fact, all you need to become a profitable lazy trader is a single strategy which you can trade for only minutes a day. Visit thelazytrader.com and download for free 5 rapid ways to become highly profitable at Forex trading and your trade secret video pack so that you can copy the winning elite and rapidly accelerate your long-term success in financial markets trading. Trade profitably from as little as minutes a day and beat the banks and brokers at their own game. This is available for a limited time, so download it today. www.thelazytrader.com. It's free, fun, and most importantly, it will help you. Visit thelazytrader.com.